Hey traders, Akil Stokes here of Trading Powered and the live Forex ratio trading room. Coming off a pretty big day in the live room, and if you're one of the members that joined me in there today, then you know I was pretty fired up. Not only did we have a good day with the Euro Yen, minutes after I shut down the room, our Aussie in fact did hit target one. Again, that Aussie trade that we were in since Tuesday. So that was a good first target winner, about 55 pips up right now. But really, with today's both of these trades, I should say, both of these trades were pure structure-based trades. So no patterns, no Fibonacci's, anything like that. They're just pure structure-based, and that's one of the things I love to preach when I do my training lessons and when I talk to different traders. Is it's great to trade patterns. It's great to do all the fancy stuff, but knowing the basics is really going to help you out a lot. And well, that's why I want to focus today's hopefully very short video on. If you were anywhere in the markets this morning, well, then you probably saw this drop. Um, we went from about, and same thing happened on Eurodollar. We went from about let's say 28.93 all the way down to about 27.19 in today's day trading session. And I want to show you how we actually captured the majority of this move. We were looking at Euro Yen here on the range bar charts, and let me scrunch this up real quick. And the first thing we identified was a break and close below structure. Now I have my DSR levels up, these little boxes. Green is going to be major structure, blue is going to be minor structure, basically to give you a visual representation of what happened. And the first thing you can see is that we came down to this level right here where we had both major and minor structure, and the market broke through it. Now as soon as we saw that break and close below structure, well, that tells me that this price action is most likely to continue to the downside. Now it doesn't always go directly there. Usually we see some type of retracement, but overall it's signifying a change in the most recent trend. Now a few traders in the room actually jumped on here before me, and I just hit something here on my chart. There we go. That's back to normal. All right. There we go. Don't hit buttons you're not supposed to push. But anyway, a few traders in the room actually caught this before me. They looked at this move right here, and as the market spiked back up again, we had that break and close below structure down here. As the market retraced up, it actually came into a nice structure level. I'll draw another line on here, and if we look left, you can see it hit structure right here, and it's right at the bottom of this other DSR level. And they hopped on the market short at that moment. Because I was doing some analysis and probably talking and explaining something, I didn't have a chance to hop into this trade. But I did tell myself, if the market gives me another reason to get involved, well, I'm going to try and get involved in this trend and ride it down. So as the market retraced, you can see we came off of these not really double tops, but we came off this consolidation level, and then we broke through, giving us new structure lows. So in the big picture, we're talking about new structure lows down here. In the smaller picture, in the most immediate trend, we're looking at new structure lows right here. Next, the market retraces once again, followed by giving me some more confirmation in the form of another new structure low. What happens after that is the market, well, continues to push down, but eventually, there we go. Eventually, we push back up and retest this previous structure level right here. And this is where my radar went off and said sell, sell, sell. First of all, I knew that if this market was going to continue lower, we should not break this level right here, this last retracement, and we definitely shouldn't break too far above this level right here. So this was my safety net, this 128.88. And of course, because I know how the market works, I know that, well, if I put my stops 2 pips above this level, the market may snatch up my stops and go on to run without me. So I was smart, and I put stops up here above the 129 even handle, just to give the market some room to breathe in case we did press up that high. And well, I'm glad I did so. Glad I followed my rules and used my 2 ATR stop, and that's exactly what we did. The market pushed up. We actually got above the structure level I just mentioned. So you see we got above here, not too much, about 7 pips above there, before finally rolling back over. And then once we rolled over, well, the rest is kind of history. We went on a tear, We came down for target twos, which are at a 127 in extension of this. Swing high to swing low and back up. Came down and hit target ones for about 45 pips, and then I went off to a higher time frame, did some more analysis, and selected a good target two. And you can see, well, we rolled down and hit that for another 78 pips on target two. So all in all, a very good trade, and you can see, the range bar once again is a lot clearer view of what happens in this chart, and we were able to catch the majority of this. So again, good day in the live room. Just wanted to give you a brief video showing you what we did and how we do our analysis on a daily basis. And I'll see you in a few days for my live room weekend review, where I'll do a total recap of everything that went on throughout the week. So until next time, traders, remember this: plan your trade, trade your plan. Take care.